our topic on key amendments to SEBI Listing Regulation 2015, Part 2. So we are now having Part 2 because we have to stop in between. And I hope today we'll be able to finish with our esteemed panelist, Ms. Amita Desai, Practicing Company Secretary, Founder Partner Amita Desai and Company, and Ms. Varika Rastogi, Company Secretary and Head Legal 3i Infotech Ltd. Welcome both of you, and we really appreciate your time and contribution. Thanks a lot for the same. We have with us, of course, our own Mr. Bala. Today, we don't have Mr. Sudhakar with us because he's attending Secretary Standard Board meeting. But yes, we have with us Mr. Bala, whose colleagues is not there. Let me and of course, this presentation again will be carried out with our partner, Ms. Alifya Sapatwala. Thank you, Alifya. And I introduce, and many people knows her. Ms. Varika Rastogi is a fellow member of ICSI and holds bachelor degree in law. She brings a versatile experience of more than 2 decades in the field of corporate law, company secretary, global compliance, and presently she is having corporate secretary, legal and global compliance function for 3i Infotech Ltd. She is a member of executive leadership team of 3i Infotech. Corporate governance and strong compliance-driven organization culture is a focus area for her. Her work experience includes a stint with renowned corporates such as Majesco Limited, Chambal Fertilizers, Hero Honda, Modi Group, etc. She is passionate about philanthropic activities and support various NGOs engaged in healthcare, education, and nourishment of needy children. Welcome, Varika. Thanks a lot.
Thanks a lot. Yeah, thanks
welcome,
a lot.
Welcome, Varika.
Opportunity.
Thanks. Let me introduce Amita Desai, another panelist. Amita Desai is a practicing company secretary with 27 plus years of experience in the field of corporate compliance and governance. She is an insolvency professional and a CSR consultant. She is a founder of Amita Desai and Company, a firm based at Mumbai, which provides advisory secretarial services on ComapniesAct, FEMA, security law, IBC, merger and acquisition, and restructuring and CSR. She is also advising on governance and compliance to many NGOs. She is a regular speaker at various forums of ICSI, ICAR, and other social enterprises. She has contributed various articles which are published in the Charter Secretary Focus magazine of WIRC, Mumbai, and e-magazine of Mysore chapter. She is a trainer, motivator, and an avid reader. She loves traveling and interacting with people on issues related to governance. Welcome, Amita. Really appreciate your time and contribution.
Yeah, welcome, Amita. Nice to have you here and very motivating, whenever I see you. Yeah, thank you.
Thanks for the invitation and great to interact with everyone. It's a platform, great platform you have created, Mehta&Mehta. Thanks. And very happy to be part of some of the webinars always. Thanks.
Thanks a lot, Amit. Sorry.
Hey, so no, this is more of an interactive. So that's what people like about this. And again, I was very impressed with Varika when I met her last, So thank you, Varika, part of this discussions. And she carries with a lot of experience and knowledge. And, I appreciate she has worked with a very branded company. So I requested her and immediately she accepted. So thank you. And of course, our own Bala doesn't require 4 decades of experience. He's a prolific writer. I see every fortnightly, every weekly, he writes the articles and express his view. Thank you, Mr. Bala. Again, a privilege to be part of this program.
We always tell him all-rounder because any topic you ask, and he has experience.
Thank you, sir. Thank you.
So you take up any topic at any moment, he can speak. That's versatile his knowledge is.
Thank you. Thank you. Thank you, sir.
And so I'll request Ms. Amita and then Ms. Varika to say a few words on the topic, one minute, and Mr. Bala. And then Alifya, you can start. So over to Amita. Thanks a lot.
Yeah, hi. So last week we have discussed in the part 1, though we could not complete, and that amendment which has come from SEBI on 14 June is very, I mean, it is touching upon many regulations, and we need a deliberation and discussion with the peers and with the seniors, and of course later maybe to the regulator. We discuss about the board permanency, what are the disclosure or the rumors to be denied, confirmed, or clarify. We also discussed the new disclosure quantifiable threshold also last time, and the new requirement for the cybersecurity reporting, the new definition of the senior management already there, but what are the further the change or resignation of the directors. We discuss all those things. The major now discussion today should be on the regulation 30 and the discussion on the table or the schedule where the materiality threshold will be affected and what is to be discussed. So I think it's a great discussion, and I acknowledge many senior people, and always I think Mr. Malik is always there. Good to see you, Mr. Malik.
Yeah.
And many of our senior friends, though I can't give the name, but many across the country have joined. And I also acknowledge the presence of Vallari Gupta. Hi, Vallari. Good to see you.
Hi, good morning.
Yeah, good morning. I think this discussion or this amendment on the SEBI listing regulation touch upon not only the PCS but all, and every company should gear up. So there has to be to-do list, what is required immediately and what may be required, because some amendments are effective from 14 June and many are on the 1 month time has been given. So 13 July is the next amendment or the effective date for implementation. So before that, SEBI will also come up with a lot of disclosure formats, maybe on the cybersecurity or the clarification what people are looking. Yes.
Yeah.
So I think this will be ongoing topic to discuss in next 1 quarter, at least till the reporting starts. So over to you, Dipti. Thanks everyone.
No, Varika, please.
Yeah, so Amita has very beautifully covered all the aspects in a brief. Only from a corporate perspective, we need to draft our materiality policy with a very fine-tooth form so that we comply with, and also it is not a burdensome. So that would be a win-win situation from a disclosure perspective and from a corporate interest perspective. That's a key point I would like to highlight. Now we can start with the Q&A so that we have a more time for the Q&A session. As a lot of learned people, a lot of CS fraternity experienced individuals are there.
Yeah.
So also recognize Amit Vyas, my good friend, Amit bhai, thank you being a part of this, deliberation, and hope to, have a very active participation of. Amit bhai used to write a lot of articles in Chartered Secretary. He has won a lot of prizes also by giving a lot of answers. And Mr. Malik is a youngest student in this classroom. Yeah, thank you, Mr. Malik. Okay. We can start.
Yeah.
That's a good compliment. I take it as a compliment.
Yeah, he and Mr. Bala is youngest.
Yes, youngest in this.
Mr. Bala, if you don't mind, can we start the presentation?
Yeah. We have spoken enough on this. I think we can straight away start.
Yeah, Alifya, you please start, because otherwise questions we are not.
Correct.
Yeah. Okay.
Before the question, Amita and Varika, if you also can deliberate on this, because this is a very, very critical thing of for the materiality. If we can delve it a little bit more, because averaging does not mean netting off in this case. So if this can be discussed, it will be very fruitful for others too.
Thanks. I think that's very relevant. And in fact, I wanted to discuss once that if you will start the presentation and what is the meaning of absolute. There is a scientific meaning also, or the mathematically also absolute is a number. So we'll discuss that.
Okay, thanks.
Yeah.
Right,
If
right.
Dipti permits, then I can discuss now and we can.
No, I think let the things roll on, and then
sure.
that will be better.
Let the presentation flow, yeah.
Because then other participant will also able to contribute along with you. Yeah.
Thank you, Malayajam. You brought a very, very pertinent point, actually.
Good morning,
Yeah.
Good morning, Pramod Shah.
Namaste.
Good morning, Pramod bhai. Thank you.
Sir, good morning to you.
Our
Everything fine, thank you.
member. Thank you,
And
Pramod
my
bhai.
congrats for continuous good webinars. You are doing very well.
Thank you. Thank you. Thank you, sir. Alifya?
So also, yeah.
Alifya.
Also recognize Umesh Maskari, he's very senior member, startup group. Umesh bhai, thank you. Yeah. Yeah, Alifya, please.
Good morning, panelists. And dear professional colleagues.
1 minute, Alifya. Everyone, I request to put the question answer in chat box only, because as usual, we will not have time. Mr. Bala will take it, the question parallelly, and panelists will answer it. And if anyone wants to contribute, they can put on chat and take a permission or raise hand if they want to speak. Thank you. Yeah, Alifya, start.
Good morning, panelists and my dear professional colleagues. I welcome you all to the part 2 of the presentation on SEBI LODR Amendments 2023. So last week, we have already discussed some of the important amendments. We can have a quick go through on that. So an important amendment was pertaining to vacancy in the offices of the compliance officer, CEO, CFO, WTD or manager, which now the listed entity needs to be filled within 3 months of being created. Further, a director on the board of the listed entity shall need approval of the members every 5 years to continue to be in the office. A new regulation 17E provides that any vacancy in the office of the director shall be filled within 3 months. And if it results in non-compliance of the composition of the board of the listed entity, then such vacancy shall be filled not later than date such offices is vacated. An important amendment pertains to quantification of the disclosure requirements, which provides of material events, which provides 2% of the turnover of the audited consolidated financials, 2% of the net worth, 5% of the average of the absolute value of profit or loss after tax as per the last 3 audited consolidated financial statements. Amita ma'am, can we discuss on the absolute value here itself?
Yeah, it is better if we discuss, because there are a lot of questions coming that if there is a company with respect to 2% and 2% of the turnover and 2% of net worth, there is no mention of the absolute value, because that is not the average. It is just a last audited consolidated financial statement. So it is on the group level or at the enterprise level. But in the point number 3, where the threshold is 5% of the average of the absolute value of the profit or loss, both are covered. Profit or loss, absolute value means example. Sorry, I think my echo is coming. So if there is a first year, there is a 5 crore profit. The second year, there will be, say, 2 crore loss. And the third year is also 2 crore loss. So it's not netting off and taking 1 crore only. It is 5 crore in profit also, you have to take the absolute number. 2 crore of loss also, you have to take the absolute number. So 5 plus 2, 7. Even the third year also, there is a minus 2 crore, that is loss. But you have to take that 2 crore also absolute value. So your average or total is 9 crore. Of that, average of 3 years comes to 3 crore. Of that, 5%, which is 15 lakhs. So even if you are in negative, you have to take that value. You don't have to put it at 0 or neither it is minus. It's not netting off. I think that's the purpose of putting absolute value is in number, and they cover both profit or loss. That means the loss also you have to take that number, average out and calculate 5%, and that's the threshold for the quantifiable material, I mean the disclosure on any event or information which exceed this threshold. If there is any question, we can take up, Bala sir.
In fact, Mr. Mallikarjun has actually put it on the chat box, giving the example how it is to be calculated very nicely and put. I think people can go through it. That will give a better understanding for you, whatever you explained. Thank you, Mallikarjun. Your instant reply and the instant response.
No, I just shared what Vinod Kothari has put in his guidance, so that will be helpful for all of us. So they have given an FAQ, and there they exactly what Amita has said. I just thought for the good of others. Yeah.
Because for the CSR calculation, it is not an absolute number. So when we take the average of 3 years, there we take the netting off. I mean, it will be Here the word is use absolute number, and so the calculation what Vinod Kothari and yesterday in corporate professional seminar also Savitri madam also has confirmed that this is way there was a detailed deliberation there also. So I think for the fraternity's benefit, I think whatever we understand, that's correct. It's not netting off, but the absolute number. We can move ahead then.
Yeah.
Further, according to the now quantifiable requirements, suitable amendments needs to be made in the materiality policy of a listed entity.
Sorry, I will just correct. It is not required to be. It is an optional. Whenever you have the opportunity, company can. We cannot suggest on the platform that it is required. Alifya. So I think it is an option given if any company. It is for the benefit of the employee to find out that which are the information which they have raised or to the KMP or the management, that this will have an impact and the disclosure requirement. Yeah, Alifya, so.
Thank you.
Further, proper timelines have been provided for disclosure of material events, which is 30 minutes from the closure of the meeting, 12 hours from the occurrence of an event if the event is from within the listed entity, and 24 hours from the occurrence of the event if the event emanates from outside the entity.
So what do you want to discuss?
Further,
Anyone has a, Alifya, you can discuss what is emanating within and what is from the outside. I think that you can just elaborate, giving some examples.
Yes, so events emanating from within the organization pertains to any event which is pertaining to the company. So it may happen from a branch office of a company or some other plant location or something. Further, an event which is outside of the entities for some other authority having some, putting some orders or putting some limitation on the company, which the company will be required to disclose to the exchanges. Any further examples you would like to give?
So if there is a fire in the factory at 9:30 on Saturday night, then the company secretary has to give by 9:30 on Sunday morning the notice, correct? So is my understanding right?
Absolutely right. Absolutely right.
Okay.
Because now we are living in the world of digital advancement, and this era, the news and the rumors or everything spread like fire. So even if your fire is happen in the factory, the company secretary or the company people will definitely will come to know in so soon. So the purpose, the rationale for this amendment that the public at large should also be informed and the disclosure should come in time. You cannot see that Saturday, Sunday is the office is not working now. I can't make the disclosure, and I make disclosure on Monday. That's how I think. If you read the discussion paper, the rationale behind this is a unnecessary delay, and then the price sensitive information are not disclosed in time. I think
so
that
it is important that it is
Mr.
important that the compliance officer implements along with the company an internal SOP as to who, to whom, what should be informed, what matter. That is very critical. You know, I just thought I shared.
I thought everybody, all the companies and the PCS will gear up that to do list what is to be done. So, and what are the resources to be deployed, what kind of rumors and how you can find out. All those things I think PCS and the companies will do. Yes, Alifya, you can go ahead. So I think that 30 minutes and 12 hours and 24 hours are very, very critical, and SOPs will be setting that up. Yeah.
Intimation? Nikale the na?
Further, top 100 listed entities with effect from October 1st and thereafter 250 listed entities with effect from April 1 will have to confirm, deny or clarify any rumors of an impending material event which is leaked in the mainstream media or which is published in the mainstream media. So this is an important amendment which has come into. Such disclosures have to be made reasonably, as soon as reasonably possible and not later than 24 hours.
I think there are few questions. Shruti has mentioned the materiality for an enterprise will be determined as per the production value of that particular enterprise. Production value. What is the materiality for the enterprise? It is
not
all the
yet-
entire group on the consolidated previous financial years. So that's a
Yeah,
material.
it is not only the production
Production,
value,
it's
it
a
is the
turnover.
comprehensive, the overall situation of what is
The
it,
overall
what they have
network.
to decide. This is the overall thing they have to decide, not only the production value there. What
It
is
is
the
three
material?
threshold has been given, no, Bala sir, turnover and the net worth and.
Yeah, correct. With the
profit.
reference to the criteria, what is given, they'll have to go by the consolidated group balance sheet. That's what they'll have to do.
Yeah.
Because
I
they
think the
cannot
next
attribute
question
only
was-
this thing. Because now earlier the criteria was not now the criteria has been mentioned. They'll have to adhere by that criteria and apply the same on the consolidated balance sheet. That's what.
Correct.
Next question is what is the material matter is approved by way of the circular resolution? I'm not very clear about the question.
No, I think within 30 minutes, whether it will start from the board meeting, but I think it is very clearly mentioned that from the closure of the meeting.
Closure of the board meeting, that is
in
there.
which the decision pertaining has been taken up. So it is nothing to be related with the circular. But I think his question is if such important matter will be taken up by circular resolution, then what? I don't think it is a board's call. Board will not do important
Yeah.
material matter through the circular. It will be
Yeah.
immediately the meeting will be called.
Yeah, generally it's a discussion based actually face to face rather than the circular.
These are the
resolution.
hypothetical question, but I think in real life, real
Yeah, that is
situation,
right.
it doesn't happen that way.
Because such an important matter which are always discussed on the one-to-one discussion only, things are not passed by the circular resolution. As you rightly say, it's a hypothetical question. Resignation of the director need not be accepted by the board. It comes into effect from the date it is received by the company. Unless it is started with a different date, which as to the date of the letter of receipt.
No,
Now,
he's
what has to
saying
be,
which is
what
the
has to,
later.
what has to be intimated? Only when it is placed before the board, the time starts or the date of letter receipt.
I think as soon as we come to know about the letter.
Yeah,
so
as soon
letter
as the
come-
matter has come to know, because it need not wait for the board to approve and other thing and all this. If the resignation takes effect, the moment you come to know, it has to be intimated.
No, I think his question is relating to the date. 1 second, it is mentioned effective
So
date.
he is asking only when it is placed before the board, it is to be intimated or what is it? That's what it is says.
No, if the question is that 1st July, I have received the resignation letter, but the effective date of resignation say is on 7th of July.
Yeah.
So which date will be relevant? That's a question. He has stated a different date, which is a later on the date on which letter was received. Now, when this has to be intimated, if it's a director, ordinary director, then I think it is a date immediately as soon as the company or it receives by the company. There is no relieving by the board. So the board meeting is not important. I believe as soon as the company receives, it starts. Your intimation disclosure should be.
Yeah, intimation is the important thing because board is actually only take note of it. Because board doesn't have any role to play
Varika,
when the director
Varika, what
resigns.
is your view?
Varika is there?
Yeah, for a
Yeah.
non-executive director, I concur with the views expressed by Amita, and that there is no need of acceptance by the board of directors. It is with effect from the date the director gives the resignation. But as far as managing director is concerned, the board has to accept the resignation and to be relieved of the liabilities and role what he is discharging of. And normally in the employment contract of MD, there is a period. So, which is agreed upon while I think it's a pretty clear question. For a simpliciter director, it would be effective from the date when he has tendered the resignation.
Yes. Varika, is there any further question? Or we can go ahead.
One question is, sometimes it happens that the letter is given, but subsequently the board or the management discusses and take back the letter. Then what happens? There has to be a clarification of this thing that it is taken back, because this was the question in another forum. It was discussed at length and there was no conclusion.
It cannot be taken back. Once resignation is given, unless with the acceptance of the board only, it can be taken back.
Actually, normally in good companies, whenever any director intends to resign, so they discuss with the management or the promoter that we are expressing our desire to resign. And so these kind of discrepancies anomalies do not occur. Because it's just not like that. I present my resignation. I will at least give them a flavor that I am thinking of resigning or whatsoever.
According to my experience with the companies where I worked actually, unless extraordinary circumstances, that is not the thing. The routine circumstances I am talking about. In fact, one of my managing directors, something like that, due to his personal reasons, he wanted to get relocated, he wanted to shift it, he wanted to resign from the board. He was a managing director. Then the meeting he expressed, this is what I want to do, etc., other thing and all, informally. Then what happens is the board has actually said, okay, there is no problem, but the only thing is, unless there is a exigency, etc., another thing and all, you should allow us a certain time period where we can actually find a successor for you. So allow us for some time. Once we find a successor, then you can put down the paper. Because as per the employment contract, you are supposed to give 3 months notice. The board has actually said, once we identify the successor, then you can put on the paper. Till then, you may have to wait. That is what the board has actually suggested. Accordingly, he agreed. In fact, the day he informed he wanted to quit the company, the effective date of his resignation took 3 months or something like that. Normally, that is what it is done. Varika, I think that will be the case also, no?
No, it mentions Bala sir very clearly within 7 days from the date that such
That is right. But
comes
I
into effect.
am talking about before you submit the resignation. There's an informal discussion is there with them. So this is agreed upon because in case of the executive director, it is not suddenly he comes and put the paper and he says I'm resigning or something like that.
Yeah, that's what I'm thinking. Normally, there's a discussion. Before putting and after that discussion only.
Yeah.
Because sometimes it could happen. There could be a short of the board. So if the board becomes short of the minimum requirements, then it's also a problem for a company. So that's how it is always. Directors tend to do a discussion, but as Mr. Bala is saying that in the extraordinary circumstances, a director just say, no, take it my resignation.
Extraordinary circumstances, I come to a company, the board called the meeting in the midnight at 12 o'clock, he was sacked. I'm not talking about those circumstances.
No, Mr. Bala, the discussion is not for the independent director or executive director.
No, correct. It is only for the executive director.
Yeah, we are talking about the non-executive director.
Non-executive directors
can resign from any
date. The moment he puts the resignation, that takes effect whatever the date, otherwise unless he introduces the future date. I'm not talking about that. I'm talking about
we are talking and taking up the question. We are taking up the question that the non-executive director has sent the resignation on 1st July. The effective date is say on 7th July. Then what time is the disclosure start? According to me, the disclosure starts on 1st July when we received, or the company received the letter. Because the effective date can be later also, but the company's responsibility or the obligation to disclose starts on getting the resignation.
Correct. Next question is here actually. Material matter is unlikely to be decided by the circular resolution and it is avoided by the post, etc. Okay, this is what we said actually. 30 minutes from the meeting date, that also we have said this actually a comment. Sub-regulation 30 now inserted by regulation 30 lakhs about the receipt of the communication from the regulator. When a show cause notice asking for some clarification or otherwise from the stock exchange, should it get attracted to the communication?
We will talk when Alifya will reach to that 13, the show cause notice. We will discuss in detail later.
Okay. Stock exchange is the quasi-regulator as SEBI has delegated its power to them. Okay.
Yeah, this is just a statement which is right. Stock exchange is private limited. I mean, it's a company, but the SEBI has given power to them.
In short, it means the date of the receipt of the intimation that matters the note date of the origination, which is different date. We discussed actually here.
Yes.
Part A of the Schedule 3 approved by the board, except Class 4, shall be disclosed within 30 minutes or 12 hours.
Approved by the board, 30 minutes. 12 hours is anything emanating from the company, inside from the company.
Okay. You have to give the notice on July 1st that we discussed actually. Date of resignation, I think this also we discussed here. Date of resignation, notice period and working days are company's internal policy views solicited.
No,
date of
that is
resignation notice period applies only for in case of the executive directors. Non-executive directors is concerned, they are free to resign anytime when they want to. There is nothing in their notice period, etc. Nothing according
correct.
to me.
Correct. Absolutely.
NED resigns, then it is prior accommodation. The board has to only note. That is correct. For ED's board has to accept it. That is also correct. That's what we also said. And you have to inform the day on the leaving. No, it is not on the day of leaving. The day you are getting the intimation, not on the day of leaving.
It cannot be kept under the wraps, and
Yeah, that is right.
Am I correct in my understanding?
The
No.
moment the intimation is actually come to the knowledge, it has to be intimated. It is not the day of the leaving or something like that. Can we mention the resignation subject to review?
No, for the non-ED, I think
Non-ED, nothing. Non-ED, he is free.
Non-ED is nothing.
Yeah.
Non-ED, you got it. You just intimated. That's it.
Correct.
In case of the ED, it is not happening like this. It's practically a hypothetical question, really. Really speaking, what is the employment contract is there? So normally they discuss and they do it at this thing. That's what I have seen actually. Unless somebody has a different experience. Next,
Yeah,
is
Alifya.
my question is about SMP. What is SMP?
Dipti can just come up.
Dipti, what is SMP?
Senior management.
Okay.
Yeah, even for the senior management, as soon as you decide or he is resigning, you have to intimate whether the notice period could be anything, 3 months or 2 months, or I think it is a date of resignation.
Yeah, that is right.
Effective word is not being used. It is as soon as we come to.
As soon as the company comes to know, it has to act upon. That's all.
Date that such resignation come into effect.
Yeah.
So once a person resigns, no, he cannot withdraw. So the resignation, according to my understanding, comes into effect immediately as soon as I serve the notice. Then it is a board's decision whether they want me to continue, and then they decide. But on my own, I cannot withdraw. So for the practical purpose, the date of such resignation coming into effect is immediate, as soon as the person gives the resignation letter.
So I have some question. So see, you have so many banks and NBFC, the large, NBFC and the bank, where normally you have those routine RBI inspections, and after doing that inspections, they come out with some observations, and they have a lot of findings, and those findings ultimately leads into some kind of a penalty on a bank or NBFC. Now the question is, within what first questions is it that the bank or a company has to intimate to the whole world, through stock exchange, look, there is a observations been given by the RBI, and so because sometimes it is more of a routine in nature, but at the same time, whenever RBI does any the inspections, they always comes out with the observation. And of course, there is another question, because one of my friend, who's a practicing company secretary, he called me and said, Mr. Mehta, now should I take this observation in my secretarial audit report? Because now these are all, I mean, the company has violated something or not as per the same. Yeah. So Amita, if you could just, Yeah.
With respect to the disclosure under the current amendment in 30, the new clauses which has been added, 1390 and 20. If you are mentioning about that, there is a very specific event base. It is mentioned where there is a search and seizure, reopening of account, and investigation under the Companies Act started, then you have to intimate. Other places, there is any suspension and imposition of fine, settlement, debarment. That means a definitive action has been taken. Whereas what you are saying is just RBI took the inspection, they gave certain observation that there are certain lapses and you have to plug in those lapses. Otherwise, it will be in the penalty. Till that time, at the most, PCS in his report, he can mention that there is he can put as an observation that the company do not have the proper internal control and the SOPs or whatever. He can put it, but it is not a kind of a penalty or any action has been taken so far by the regulator. But here we are talking about regulation 30, where the disclosure will be immediately after the penalty or certain events which are mentioned therein under the regulation itself. Then we have to intimate. I hope this is clarified.
So anything which is because see, for a bank and NBFC, non-compliance of any minor nature also leads to the big penalty, for an RBI. And as a shareholders, do you think it should be should be highlighted to the under the regulation 13? 30,
No.
sorry. So yeah.
Regulation 30 is purely for the disclosure to the world or the stock exchange, whereas we are talking about the sectoral audit or under MR3 or anywhere MGT say 8, he has to make an intimation or sectoral compliance report also. It is just an observation he can put, but not qualifying, but he can always add into that the company or the board requires to strengthen its internal control policy, something like that. When repetitively the RBI inspection reports are showing some major observation, I think to save him.
There are two questions. The first question with respect to disclosure. Now, for company people, this may be a minor observation, but as an auditor, sectoral auditor, or a outside person, okay, for the outside world, this may be the important observations, So again, disclosure. So whether you feel that it has to be reported, because this may be in their routine nature, but those RBI inspection also happens once in a year or maybe once in a 2 year. But anytime, if any observations been come from the regulator, so that is also, according to me, it has to be disclosed to the whole world. Look, there are some observations been given by the regulator. Yeah, that's what my observation.
Absolutely, I agree. I think I, as a PCS, would also put in the report, and not as a qualification, but as a rider somewhere. Definitely, I agree to that.
Okay, so now henceforth, if as a practicing company secretary, wherever we are going for an audit, one has to be very clear about those timelines been adhered to, and those new amendment, new changes which are been given now. So as a practicing company secretary has to make sure that those timelines been properly adhered to. Yeah, that's what my observation. And then now about the sectoral audit, any of those observations which are of a major nature, I'm sure it has to be highlighted in my sectoral audit. So because I've seen in couple of audit report also, those observations are not been reflected anywhere in the sectoral audit. So there are some misunderstanding amongst our CS fraternity also, that look, when I'm doing a sectoral audit, it is only with respect to company law only, and those other laws applicable. And they say, no, if unless and until management give us a mandate, then only I'll do it. Otherwise, I think that's a misconception. That's what I understand. Yeah.
But that's a different topic, Atul. But definitely, I agree with you. This is, we are talking about regulation 30. There we will talk about only the action has been taken, or a certain event has been mentioned in regulation. There only we have to disclose to the stock exchange. Yeah.
Okay. If the NED to change the designation for the ED, at what time should intimate it's come under normal practice? Please advise.
NED will first, okay, this is a change of designation to
NED to ED, that's what he's saying.
Anytime, as soon as the company passed the resolution, appointing him as from NED to ED.
What is the timeline of reporting the event information which was not material as per the materiality policy of the company, but as per the new threshold, which is actually coming under
I think
Part B Schedule 3.
Yeah, that's immediately 30 minutes and 12 hours and 24 hours, what has been mandated if the thresholds are exceeded.
Yeah, correct. That we have been discussing that. That is the right answer. Yeah. Alifya, one more thing. It happens sometimes that the senior management person send the resignation to a reporting manager, maybe MD, CEO, etc., and other thing and all, and the CS may not be aware of it, or he may get aware after a few days. In that case, now, can we as a CS report? Please advise. No, here, that is why it has been actually the awareness creation, which we talked in the last session also. Because CS cannot actually work alone himself. He has to bring the awareness across the people from whom the information has to flow. There has got to be a system in place, has to be there. He cannot get away saying that I am not aware and other thing and all, because he is being a compliance officer. The awareness is required to be brought.
Yeah, absolutely, Bala sir. I think you have to sensitize the entire, all the company department. They have to intimate to the, there has to be a culture and a SOP to be devised with this new amendment. Everybody has to report because the disclosure norms are very high, and you cannot have the excuse of not knowing, and the penalty will be high. So I think sensitization of the entire company people and the department would be a major, in the next 1 month, it will be a major exercise for every organization.
Varika, your input, anything on this?
Yeah. So it's only mainly the corporate secretary job to sensitize, because he or she is the best person to make them aware. And wherein how strong you can come out, that's the key in implementing these higher disclosure norms in the organization, because there would be some reluctance from everyone, why this much, what would be the impact, and that's how they would be questioning. There is you have to explain in such a manner that it's also looks not burdensome, but also in the spirit of the law.
Whether the appointment of the women director is compulsory in case of the material subsidiary of the listed company, and what about the subsidiary which is not a material subsidiary?
Varika, if you can take up this question.
Yeah, for material subsidiary, we need to appoint one common independent director,
No,
not
it's
a woman independent director. So that is how it is. So
no, she's, I think Anurag Saxena has put that appointment of woman director, not an independent director. He's asking whether the woman director appointment is compulsory in the case of material subsidiary of a listed company, and what about a subsidiary which is not a material subsidiary? If it is, my reply to it would be, even if your subsidiary company is touching the threshold where the woman director is required, then yes, otherwise not. Whether it is material or immaterial, I think the compliance for entity wise you have to see. Am I right? Varika, you can correct me.
Yeah, you have to correct, Amita. You have to compute the thresholds for your entity wise. Here the materiality woman director is not the criteria.
Nominee director resigns. Once the due amount repaid, share sold. If company will close the loan or share sold to them in 3+2 days, if shares, what date to be considered for intimation fee?
I think practically nominee director will resign only after the company has repaid completely, not the transaction plus 2 days or something.
Yeah. And
So
even sometimes, even sometimes after, because I have faced this practically, even the banks have been repaid the loans, but it is not just that the very next day they give the resignation.
Correct.
It's a process. It almost takes a quarter, I would say 2 to 3 months by the time you receive their resignation. But yeah, obviously nominee director has to give a formal resignation. We just can't say your loan is repaid and you just move on. The process triggers start from there, but obviously resignation is required. Even in our case, when we filed DIR 12 with the MCA, I'm not not from SEBI. MCA asked us a lot of questions actually when a nominee director is resigning.
I think, sorry, Varika, I think for the nominee director, no, the board on its own also can accept the situation where the nominee director, whether he doesn't give the resignation letter, but formally resign. Definitely for the purpose of the form filing and the rules doesn't require, neither the act requires, it's silent on that. Practically, we'd always ask a resignation letter. That's another situation.
Yeah,
but in
so
situation,
Amita, I'm talking about this contingency, what you're saying, like when the board takes a call, we have repaid the loan. Now the nominee director is not required from this particular financial institution. So
Because that's a part of the contract, and if the contract
Yeah,
says he's a nominee director, you can take, suppose my nominee director practically has gone abroad and he was not available for the resignation also, we can't continue. Then the board took a call, and then pertaining to this agreement that the loan has been repaid and the board has passed the resolution, then the nominee
so
director has stepped down.
So that's where I'm saying in the same scenario I faced this, because when we filed the DIR 12 is attaching the board resolution, the board has passed the resolution considering the loan has been repaid and the nominee director is not required, and that's how this composition is the revised composition, and nominee director's cessation takes place. So MCA did not accept the DIR 12. They came out with so many queries.
Yeah, that's a that we will not discuss about the technicalities, but the legality remains the same, that you can accept whether he stepped down, not resign.
Yeah,
that's
you're right actually. But the only thing is, nominee director is also like any other director.
Yeah.
He is not having a special privileges, etc., not to give the resignation, etc., and other thing and all. Really speaking, he has to give the resignation letter. That is reality. But the thing is, as you say, it all happened. But today in the digital world, traveling abroad, that etc. doesn't matter, because everything is reduced on the click of the button. This can be done actually as a good practice. Not only that, as per the MCA requirement, also the resignation letter is actually required.
Okay.
Regulation 3013 states disclosure
Can
about
we continue, sir,
receipt of the
with all
communication
due respect, or else we won't be able to finish the presentation.
There are certain questions, Alifya, let us complete. But I think 3013 we will reach and we will take it up.
Yeah, regulation 3013 state disclosure about the receipt of the communication from the regulator.
No, sir. Bala, sir, that she will take up and then that time the slide will come on 3013. We will discuss separately.
Okay.
Mr. Malik has just raised one question that for the senior management, the date of acceptance of resignation will trigger the date. Yes, because for any employment, there is a acceptance is required. We were talking about NED, non-executive director, there is no need for the acceptance. But for the senior management, the date of resignation would be when the management will accept his resignation. So the resignation, he wants that to clarify. One more question about the board. Small shareholder director members request to remove the director from the board. Will take approval in the next coming meeting. In what date will be considered the intimation? Small shareholder director member request to remove. So the removal, actual when you remove, that will be the effective date. Am I correct, Varika? If you have anything to say on the small director's
you're
removal?
right, absolutely you're right. I agree with you.
So I think the rest are all relating to 3013. We will take it up. So I think, Alifya, you can start now.
37A.
Okay. So I think then we can take up some question on the 3013, which we postponed.
Okay.
I think there is one question saying that Naveen, he said CS cum compliance officer red flag 10-year-old FDI default, non-compliance made by the listed company, and even email was sent to the RBI Mumbai to clarify what is the role of PCS under regulation 3013 for non-compliance. No, sorry, 3013 is it's a disclosure to the stock exchange, and PCS will be taking up in his report. So there is nothing, I think there is a misconnection here. 3013 is only specified. If you read 3013, it says about only disclosure for, one second.
Any communication received from any regulatory, statutory or judicial authority.
It is not a communication from anywhere. You have initiated, so that has nothing to do with the 3013, I believe.
Regulation 3013 state disclosure about the receipt of the communication of the regulator. It means any communication required to be informed to the stock exchange, or it should be interpreted in a way that an event that is falling that the event which is actually falling within the Schedule 3 due to the communication received by the regulator.
Yeah. It is not to be disclosed.
Yeah, we actually discussed elaborately in the last session. It is not any communication. It is actually with the reference to the falling of the event which is actually specified. That is what we discussed actually. That is the answer for that. You can refer the last recorded session as well on this. We deliberated on this. Yeah.
I think Mr. Sukumar is saying acceptance is mandatory for the non-executive director also, because depending on the background and expertise and the company situation, the board may request him to withdraw. I think acceptance is not required. Once he resigns, board may ask him to withdraw, but that also the regulation says that as soon as it's not effective date, but when it comes to know, the company comes to know. The language is very clear. The date that resignation come into effect.
In fact,
7 days from the date that such resignation come into effect.
As far as the NED is concerned, there is no contractual regulations giving some notice period, this, that, relieving, nothing like that. He is holding the directorship on his pleasure. The day he decides he wants to resign, he is actually free to resign. There is no question of acceptance by the board or something like that. Board has to only take note of it. That's all.
No, Mr.
Nothing else
Sukumar
is-
further saying that the tendering of the resignation is only an offer. Only when it is accepted, it becomes complete. The timeline starts then only.
No, no, no.
I doubt.
No, that is a misnomer. That is not the question. The moment he expresses his desire to quit, that's all. That's the end of it. Only question is either with immediate effect or at the future state, that option is available. That's all. Nothing more than that.
I think Mr. Rajkumar has raised a very pertaining issue when he says when we have to submit the disclosure under regulation 30A, that is on 14th July 23, that is 13 July in 30 days, or immediately after the receipt of information from the associates with respect to agreement which are subsist as on 14 June 2023. I think your disclosure starts from 14 July onwards, but as a good practice, you can always give such kind of a disclosure. He further says, example, if the listed company received on 1st July, when we have to submit to the stock exchange. 1st July, the effective date of this regulation comes into effect only on 14th July. So I think last time when the Sudhakarji was there, we have discussed this point that your timeline starts after the effective date of this regulation, that is 13 July 2023. So anything you received, anything later, you have to intimate to the stock exchange. But as a good practice, if you want to intimate, if it is material and you want to, you can definitely do that. Anything further, I doubt. You can share your views, Varika, on the effective date for the disclosure on 30A.
Yeah, so we have to see in the past, because I was attending some other webinar so on this topic, so they have clarified, because you have to travel back from the 1st April 2023. So if there is any agreement subsisting on 1st of April 2003 which has not been disclosed, and by virtue of these amendments it need to be disclosed, then we should disclose that.
Sorry, Varika, can you repeat? By error, I was logged off, sorry. Yeah, Varika.
Yeah. So for effective date, that's what I feel. I've just said, whether I have been heard or not. That's
Disclosure requirement for certain agreements. The effective date is 13 July, but the execution of the date is 1st July. So whether the company need to intimate, according to my understanding, the effective date is 13 July. So anything after that has been disclosed, executed, those only would be required to be disclosed.
Hi, this is Logita. Yeah, hi, this is Logita from Lucas. Actually, here it is mentioned the listed entity shall disclose the number of agreements that subsist as on the date of notification.
Yeah,
So
sorry. Whatever is subsisting, it has to be disclosed. Yes.
Yeah, that's what I'm saying.
Case, what from when? From when is the question? Okay, suppose
whatever the effect, the contracts are in continuation, those all contracts you have to intimate to the stock exchange, whether it has been executed
the
earlier.
management and control of the company.
Yeah.
So the another person said like it is from 1st April 2023, or even he should go before that.
He should
It's
go
not that
before that.
clear.
He should go before that also, if it is this agreement is still under the subsisting. It's
if it is actually subsisting on this particular day, then you have to disclose everything.
Cutoff date is 13 July. Before that, anything is
we have.
subsisting. Suppose you are 2 years before also you have executed some contract, you have never disclosed.
You
But
have never
now
disclosed, but
amended it.
Yeah, if that is subsisting today, then you need to disclose.
And also here it says not only the listed entity, it's holding company and it's going to be very challenging.
Yeah, the whole regulation, at least for the next, I think, I don't know. Can you put up your mic on silence, please? Some background noise is happening. Yeah. See, after these regulations come, it is definitely going to be a tough time initially, at least for the next 2 or 3 months time for the working company secretaries, because they have to actually understand what is the implication, what is the thing, they have to actually accordingly act on it. Because as rightly said, if the contract has been ended 2 years back, 3 years back, then you have to see whether it is subsisting today. If it is subsisting today, it's cause for the disclosure.
That's the reason this is a very important amendment where the corporate secretary will have to gear up for identifying, find out all the detail of the salient features also you have to intimate to the stock exchange. Not only the. Yeah, I think Alifya, there is any next question, Bala sir, if you would like to take up, or we can move ahead.
No, we move ahead, then we'll take the question later.
Yeah, Alifya, go ahead.
Further, 30A we have already discussed. So we move with special rights to the shareholders. Any special right granted to the shareholders shall be now subject to approval of the shareholders by way of special resolution once every 5 years, starting from the date of grant.
Here also there are a lot of confusion. What are the special rights? The special rights are different than the special right shares which has been given. Here the special rights to the shareholder we have to identify, like a nomination to the board, board seat to be given, or affirmative vote is required till they're having some holding. Those are all rights which are allowed by the stock exchanges also, even for the listed company. So such kind of a special right, if any person, any other shareholders are having, then it has to be approved by within 5 years by the shareholders, but not the special right shares, which is different than the special rights to the shareholder.
No, because the special rights share is already approved by the shareholder themselves, it is there. Because it's a separate category of the
Absolutely.
shares.
But I think last time somebody has raised this question, just to clarify.
Further, we spoke on Regulation 37A, which speaks about sale, lease, or disposal of an undertaking outside the scheme of arrangement, which would require prior approval of the shareholders by way of special resolution. Disclosures pertaining to the object and commercial rationale for carrying out such sale and use of the proceeds shall also be mentioned in the explanatory statement annexed to the notice.
Alifya, we have discussed this in detail last time.
Yes, in detail. An important amendment pertains to the special resolution will be acted upon only if the votes cast by the public shareholders in favor of the resolution exceeds the vote cast by the public shareholders against the resolution. So this is an important amendment.
This discussion we took place in the last seminar, and the people who are interested, they can actually go through the recorded session. That's all, we move on.
Further, the exemptions have also been provided to the wholly owned subsidiary to whose accounts are consolidated. So now we move ahead with Regulation 4620, which has been amended by providing that schedule of analyst or institutional investors meet has to be disclosed at least 2 working days in advance. So excluding the date of intimation and date of meet, and presentations made by the listed entity to analyst or institutional investors. So now any meet has to be disclosed in advance and not on the day of the meeting or just on the previous day.
I don't think much deliberation required here. We can move ahead.
Further amendment has been made in Regulation 57, which provides that a listed entity shall submit a certificate regarding the status of payment of interest or dividend or repayment or redemption of principal within 1 working day of it becoming due. So earlier, before the end of the quarter and after the beginning of a new quarter, disclosures were required to be made, and now this has been done away with, whereby sub-regulations C now requires the status of payment of interest, dividend, along with any repayment or redemption will also be mentioned in that certificate.
Earlier, there was no mention about the repayment and the redemption also.
Repayment.
So that's been specified here. You can go for it.
So the amendments have been made in Schedule 3, which requires disclosure of events which are material. Part A, para A, subparagraph 1 has been amended, whereby acquisition, including agreement to acquire, scheme of arrangement, sale or disposal of any unit, division, wholly or substantially the whole of the undertaking or subsidiary, sale of stake in associate company has also been included to be disseminated to the exchanges.
I think here you want to cover the next slide and then we can take up the discussion.
Further, an explanation has been provided pertaining to agreement to sale or sale of shares, voting rights in a company such that the company ceases to be a wholly owned subsidiary or subsidiary or an associate company, or an agreement to sell or sale of shares or voting rights in the subsidiary or associate company such that the amount of the sale exceeds the threshold limits which have been provided. So even this would require disclosure by the listed entity to the stock exchanges.
I think here we have to understand that the acquisition of the whole or the substantially whole of the undertaking has been the new addition, and the acquisition also covers the cessation. The cessation is also any kind of a agreement where you are disposing of even the associate, not only the relation with the wholly owned subsidiary or the subsidiary, but the associate word is a new addition, and the threshold limit has been added, which was under regulation 30, sub-regulation 4, where 2% of the turnover, 2% of your net worth, and the 5% of the absolute value of the average of 3 years that is added. So if your acquisition value touching the threshold, then the disclosure has to be given about such kind of an acquisition. And it also covers the cessation of such entity or the such relation that's been added. You can go ahead, Alifya. You can take up the question if you want, Bala sir, relating to this, because this is important provision where the new definition or they have added a C point about the threshold of 34, regulation 30, sub-regulation 4. Bala sir, is there any question?
Let me check it out.
Yeah.
No. What if the acquisition of the share exceeded the threshold, but the company as part of the treasury operation buys shares in the normal course of the business? For example, insurance company, banking company, and NBFC company. Can a company exclude transaction done as part of its treasury operation from Schedule 3 disclosure?
No, can you repeat, sir? I could not understand.
What if the acquisition of the share exceed the threshold, but the company, a part of the treasury operation, buy shares in the normal course of the business? For example, insurance company, banking company, and non-banking financial company. Can a company exclude a transaction done as part of its treasury operation from Schedule 3 disclosure?
No, this part A, para A is without any materiality and without anything, whether normal course of business or not. I believe anywhere when you are touching in the threshold, it has to be disclosed.
Yeah, because they're not using what you call the normal course of business. That wording is not used. They are only laid on the threshold. So once you are actually exceeding the threshold, whether it is normal or abnormal, whatever it is immaterial, I think it needs to be disclosed. That's what I think so.
Yes. Yeah.
A company took a plant on the lease. Thereafter, it acquires the same plant. Then it will be required to give the disclosure under Schedule 3 EVS. Then what is the time limit to give disclosure?
Acquisition, the date of acquisition.
Kindly explain the phrase absolute value in case of the losses instead of the profit. I think we discussed elaborately this, how it is calculated. Even in fact, There is an example also has been given by Mallikarjun in the beginning itself. You can refer that it is there in the chat box.
I think there are a few questions above also. Now I think
Is sale or stake of SPV considered as a sale of undertaking?
yeah, SPV, if you are touching the, don't say SPV, but if it is an associate as per the definition of the Companies Act, then yes, it will be a sale of undertaking. If it is as per section 180 undertaking definition comes, even for the SPV, that is 20% of the value of your undertaking or net worth or the total income. That's the undertaking definition we have to see at under section 181A.
What is the timeline to disclose subsidiary agreements under clause 5A?
On the date of effective date, within 2 days, it says whatever the date, I don't have handy, but 30A. It talks about anything subsisting to disclose as on the date of the notification. That means on 30th July, immediately.
As regards to the disclosure.
And also including, no, it has to be disclosed the number of agreement that subsists as of the date of notification, and that is only the number of the number of such agreement you have to intimate on 14 July. But in your annual report, such link will go with the agreement and the salient feature of the agreement. So if your financial year is 22-23 and the annual general meeting is not yet conducted, then I think for 22-23 and otherwise it is 23-24, you have to disclose in your annual report.
As regards the disclosure to SE, I think senior executive, I think whether the disclosure are required to be approved by the board or no.
Disclosure to stock exchange, whether the disclosure are required to be approved. No, it has to be disclosed immediately. Without threshold under article number, I mean under schedule 3 part A, para A. There is no materiality. You don't have to wait for your board to approve.
Correct. That also we discussed actually earlier. Agreement under the regulation 30 are required to be uploaded on the website and a link to be provided annual report. Exactly what details of the agreement are required to be put on the website.
It has mentioned about the salient feature, who are the party, what are the major impact of the materiality. You have to decide, it's a board's call, what are the salient features to identify and put that salient feature, not required to give the complete agreement.
Correct. What you are saying is correct. What you are saying is correct. The materiality as the agreement, the operation portion of the agreement with the relevant details, I think is to be provided. I think.
There are a few questions above also.
Yeah. As per the regulation 32, it was mentioned that the disclosure made in an annual report of 2022-23 or 23-24 mean, can we include the disclosure in the next year? Yeah. If the company has got approved the board report for the year 22-23, yet need to include them in the board report, what was approved after 14/7/23. Can we understand like that the company can disclose in this year or it can disclose in the next year?
No, if your annual return is not yet approved 22-23, then you have to do in this year only. If your not annual report is not yet filed, you have to give all this detail.
Even in the annual report, annual financial statement approved, the board report has to disclose till the event which is taken place, till the date of the board is approving that report. It's already there actually.
Correct.
Yeah. Any specific definition of any regulatory, statutory, enforcement or judicial authority? I think this we elaborately discussed in the last session. Please see the recorded session. How disclosure, web link or agreement shall be made in the annual report for 22-23 is the same as already been dispatched.
If it has already been dispatched, then you don't have to, because then your already annual report is out. I think then you have to cover in the next financial year.
Yeah, correct. You're right. If it is already done, it will be in the next forthcoming annual report.
Correct.
While intimating the SE, can we say that the company has received the resignation from ED, KMP, SM, but the same shall be based on the negotiation approval. Hence, company shall update the SE in the due course of time. No, this also we discussed. There is no question here. The moment the intimation has come, you will have to intimate.
I think that we can ask SEBI to clarify about the intimation or to the stock exchange about the resignation, because that's different views are with the fraternity. So maybe some clarification may come from the stock exchange with respect to the date of resignation or the effective date of resignation.
Amita, any regulation comes into force when its implementation taking place.
Yeah.
There are initial hiccups are there. regulator normally comes out either with a modification or clarificatory note, etc. In this case also, I will feel there will be a lot of things will actually get clarified when we start moving on that. Next to one quarter, we'll have to be watchful of this.
Absolutely, yeah.
In case of the commencement of the multiple units of the production working together, like manufacturing one unit, packaging other unit, what should be the basis of determining the materiality under section 34 for capacity addition, individual are taken together for?
Sorry, I think that's very pretty clear. I'm not correctly understanding, but the threshold are basis on the turnover. So the consolidated turnover. So what is the question here? Threshold.
Multiple production working together, like manufacturing one unit, packaging other unit. What should be the basis of determining the materiality? As you rightly puts it, it will be the unconsolidated turnover of the group.
Correct. Yeah.
There is no individual unit or something like that.
Correct. Correct.
For nominee director also only on confirmation of the bank it could be conveyed and not earlier. Yeah, this all we discussed, I think so.
Sometimes for the nomination letter, even the nominee directors do not give the resignation. The financial institution who has nominated, or say the private equity who has nominated, they can also give a withdrawal letter that we withdraw the nomination. That also can be attached in the technical, in the ROC, in the Ministry of Corporate Affairs. When we file DIR 12, we ourselves has done some few DIR 12 like that, when the nominee director has not given us the resignation. But that's exceptional cases. Most of the time they definitely give. Otherwise, you have to take from the private equity investor who has, or the financial institution who has nominated them. I think we can go ahead with the 30.
Yeah, Amita,
question.
I really, today's circumstances, I do not know, you have to correct me because I'm not, since in the, after 2013, I came into picture. Since I'm not in the working, I was a old timer of 1956. In the company where I was working, we had a nominee director. Actually, what has happened was when the loan is actually repaid, etc., and all the things, the nominee director informed the board. I think it's a time for me. I have to quit them. I'll communicate to my bank. That's what he said. Bank is actually only given that we are withdrawing the nomination. We have filed the DR2 at that time. I remember that. I do not know nowadays whether that holds good or not. I'm not aware, but you say you have done it actually like that. Yeah, but according to the nominee director is also bound to give the resignation. He is like any other director. He doesn't have any specific special right, etc., except that he has been nominated by the bank. That's all.
Mr. Bala, now under the new Companies Act, the form take over the rule and the rule take over the act sometime. So for the practical purposes, yes, we ask our nominee directors to give the resignation letter and that is required. But in unforeseen circumstances, you can always put a clarification letter. And I think in one or two large company, we did this where the private equity investor has given that we are withdrawing because the payment is, or they took the redemption of their CCPs and we did that. But I think this is off the topic now, off the track. We are going, we can take up one or more question, I think, which has come on the screen. I can, somebody is asking, I think, Amarnath G, old agreement needs to be placed on the company website, or with effective force of this regulation will be considered the agreement to update the company website and not yet dispatch the notice or board. So first question is old agreement, which is subsisting today also. You have to put effective date of disclosure of such disclosure will be 13 July. But earlier old agreement, which are still subsisting, that has to be updated or disclosed. The second question is the notice and the board report is, board has not yet approved the board agreement, board report. Old agreements web link needs to place in the annual report. Yes, if the board has not yet approved and your annual report is not yet out and dispatched, the board, it has to, you have to give the web link of such not the agreement, but I believe it is a, you have to separately give a serial number, name of the agreement, parties to the agreement, and salient feature of the agreement. You have to prepare such kind, and that sub link has to be provided in the annual report.
Whether the royalty payment to the promoter company can be treated as an agreement required to be disclosed under 5A of Schedule 3, considering an agreement creating liability of listed company.
Of course, yes, definitely. Wherever the agreement is having a management change, control of management, or limiting the ability to do something of the listed company, or creating any liability on the listed or its subsidiaries, all such agreements need to be disclosed. I think here she has highlighted Alifya in the analysis.
Okay. Yes, Alifya.
One question.
Go ahead. Yeah. Yes, Vali.
Undertaking is not referred or defined. So it takes effect to 181 of Companies Act, right? So it has
180.
to, yeah. So 180 clause. So it has to go through the twin test of subjective meaning of undertaking and also the quantitative threshold of investment or income, whichever is triggered, correct?
Correct.
Yeah.
With reference to the acquisition of the assets and undertaking you are talking
Yes.
about, no? Yeah, yeah. It gives in the explanation number 3 very clearly under the paragraph A. It has a mention. For the purpose of this subparagraph, the undertaking refers to 181A. It's mentioned, Mr. Malik. Yeah. Alifya, please take it forward further.
Regarding new subparagraph 5A, agreements entered into by the shareholders, promoters, related parties, directors, KMPs, or employees of the listed company or its subsidiary holding or associate company with a third party, directly or indirectly, which has an impact on the management or control of the listed entity, needs to be disclosed to the stock exchange within 2 working days. Further, disclosures have to be made in the case of any rescission, amendment, or alteration to such agreements also. Further, it has been explained in the proviso that the normal course of business agreements entered into the normal course of business shall not be required to be disclosed unless they directly or indirectly impact the management or control of the listed entity.
Correct. So I think the previous question with respect to the acquisition, where somebody has raised a question that NBFC, they are in the normal course, they are doing as a treasury. That's a different, and here it is different. There you have to disclose because there is no mention about the normal course of business under the acquisition of say, your subsidiary or undertaking or any associate. But here, if under the regulation 5A, if the agreement is executed not only by the company, but by your shareholder, promoter, senior management, or employee, which has the impact. There are 3 things which is given with the purpose and effect of such agreement is either to impact the management and the control or impose any restriction on the entity or to create any liability. So it is not just the agreement executed by the company itself. It's anybody, even if your shareholder, promoter, which will restrict my liability, my impact something on my ability to do or creating some liability on me or changing control need to be disclosed to the stock exchange within 2 working days.
Because here it is going to be very difficult task because the company itself is not a party to the agreement.
Correct. You
It
have to
is
see the
only,
purpose and effect of the agreement.
so
Also.
suppose the promoters who are in this company, they entered separately agreement. If that is going to have the effect in this company, then it has to be actually intimated. That's what the regulation says. In which case, again, we are coming back to that awareness creation.
Absolutely. Yeah. The sensitization to all the
Correct.
employees, senior K management or any other related parties. Now the challenge is only all the related parties. So promoter group also, and the related parties, directors, KMP, employee of the listed entity, or of its holding subsidiary associate company. Everybody need to, if they enter into any transaction with the third party, the purpose and effect is on the company's ability to do something. It has to be disclosed. So sensitization and the SOPs are very, very important. PCS work is increased. We all can give a presentation to various companies that how it has to be intimated and what kind of SOP can be developed internally. Because anything not knowing is not excuse.
Yeah, that is right. Because this is going to be a very...
I think secretarial auditor should come into and make the board presentation because it would be more effective, what I feel.
Absolutely, Varika.
Because if a corporate secretary says something, okay, this is fine, but when a secretarial auditor is coming, I will be auditing this area and how you have to deal with, so it would be more impressive. That's what I feel. So,
and I think even if there is an agreement which is subsisting and now you are amending also, from 14 July. After 13 July, if you are making any amendment there also, you has to be notified, which she has highlighted very nicely that including the disclosure of any rescission, amendment or alteration of such agreement which is subsisting now, that also you have to implement. So I think this regulation 30 will need a very detailed, minute understanding and to all the corporate secretary and the secretarial auditor also. Which also says, explanation says directly, indirectly. It's not just directly. Directly, indirectly, purpose and effect, and the parties. So you see there are 3 challenges. Any question around it, we can take it up so that we can continuously, I mean, clarify this particular clause.
Let us see. See, if a holding company gives the guarantee to the loan availed by the subsidiary company, this also comes under the purview of the disclosure.
Yeah, of course, because that will have an impact of creating some kind of a liability on the company because you are giving, holding company is giving guarantee. So
Can you please?
I think.
Yeah, go ahead.
No, if there is a material, then definitely it is an impactful and you have to. And of course, this guarantee 186 thresholds are also to be looked in. But apart from that, if it is a subsidiary, if it is a wholly owned subsidiary, it may be exempted. But under 5A, it doesn't say mention about any threshold. So you have to simply see whether it has an impact, it restrict or create a liability. So the guarantee giving is creating a liability in case a subsidiary company fails to repay the loan, the liability will come on the holding company. So such disclosures are required. I think
Can you please explain what type of the agreement can be set that it creates any liability or impose restriction which it does not impact management?
Such kind of liability example, I say or enter into an agreement that on certain geographical location, I will not sell something of my goods. That is also creating imposing a restriction on the company that I will not, which company doesn't know. I mean, the shareholders who are investing in the company doesn't know. The management has some understanding, or a related party, employee, anybody has understanding back to back with the promoter that you will not, this is my area of geography, this is your, that brings a restriction to the company for a free trade. Those kind of example immediately it clicks to me. Or creating any type of a liability, like as rightly said, a liability by giving a guarantee, overseas loan taken, and now the holding company is giving guarantee, which is within 186, then you don't have to go to the shareholder. So here the stock exchange are saying, the rationale is mentioned very clearly in the discussion paper that the shareholders who are investing in the company should be knowing about what kind of a restriction or liability is being created. Because the Act says 186 if there is a exceeding them threshold. And so I think this is very important.
Schedule 3, Part A, Point 20 requires penalty levied by statutory authority for subsidiary to be disclosed to the exchange. Does it mean that the exchange has levied penalty on the subsidiary for 1 day delay in submission as per LODR needs reporting or holding to stock exchange?
Yeah, I think it reads a penalty. So any penalty is covered.
Any penalty it reads, so whether it is 1 day, 2 day, it is immaterial because the materiality is penalty levied, that's all. The details of agreement were mentioned in the information memorandum of the company. Since it is already in the public domain, will the company be still required to disclose to the exchange?
Yeah, if it is new penalty after 14 July, yes, you have to intimate to the stock exchange. Information memorandum of the company doesn't go to everyone, no? So that has nothing to do. The para 20 says that action taken with respect to the listed subsidiary or anybody subsidiary company also, including the senior management. So any levying of any kind of a ₹1 also, imposition of fine and penalties covered. So it has to be disclosed according to my understanding.
Any LOI or MOU entered by the company, that such a disclosure shall be given.
MOU, we discussed last time, you name it as a LOI. LOI is different, it's just a letter of intent, but MOU or agreement, if there is no mention of MOU, but if there is an agreement, you mention MOU, but internal, all the content is like an agreement. Any such kind of agreement where the obligation has been created, the consideration has been passed and understanding has been arrived at, such disclosures are required if 3 conditions fulfill, if there is an impact on the company's ability to do, restricting the liability, creating the liability and impact on the management and control. Then even if it is an MOU, you name it as an MOU or anything, it is applicable. It has to be disclosed.
Even this point was also discussed in the last session elaborately. I think Nishi Shukla, you can actually go through the last recorded session. You have a more understanding on that. If associate gives guarantee to the loan availed by the listed company, then will that have to be reported as it is cheating any liability, as it is creating any liability or listed company? As it is not creating any liability or listed company.
If it is not creating any liability on the listed company, it doesn't require to be disclosed. It's an associate. If associate is also a listed company, then it is there. Look out. It's entity wise. You have to see your listed company. You are creating any liability and restricting some certain thing. Then yes, it has to be disclosed. Otherwise, no.
If guarantee is provided to the group company by the listed entity, will that group company be considered as third party, thereby triggering the exchange intimation?
Yeah, again, group company, it is a listed company where you have to consider for the entity wise. So if the listed entity is creating anything which has a triggering effect, then yes, it has to be required. Group company is not defined anywhere. Group company, so it is here talk about the associates or your subsidiary or wholly owned subsidiary. Even it is falling under your group company, and the impact of such giving of guarantee will have it creates a liability on the company, or then it is required to be disclosed.
Whether performance guarantee not covered under section 186 or 179 to subsidy need to be disclosed.
So when you give a performance guarantee, just check the performance guarantee as in default or payment of any liability, which will create a liability on the company.
Creation of the liability by virtue of the performance guarantee.
Because there are always in the performance guarantee, the contract mentions that if they do not perform, this XYZ fine or liability or per day penalty will be incurred, and that will be on the listed entity. In that case, you have to disclose.
If an agreement is entered with any KMP, is it required to be intimated?
Sorry, agreement entered into KMP?
Yeah.
No, that is not creating any liability on the company. It's a service contract. It's an employment contract. It's not creating liability. You are paying them. That's not a liability. You are taking in exchange some services and you are giving him the salary or the remuneration. That's not a liability per se.
Loan agreement executed by the listed entity with the bank need to be disclosed or not?
No. Loan agreement is against the mortgage or property, which is not creating liability. Of course, it is creating liability, but you are getting in exchange the credit limits also. So that's not a liability.
Yeah, Amita is actually said in the employment contract. Employment contract does not come under this. Yeah. New rating required to be disclosed as per the para A of the part A.
I think, sorry to come again, Bala sir, with respect to the loan taken from the bank, if it is a material, then materiality threshold you have to see 2% and that kind of a liability is coming. It is a liability, but it is not required under this para A, para 5A. That will be in a separate disclosure requirement.
New rating required to be disclosed as per the para part A or part A schedule 3.
Yes.
The reaffirmation of the rating has same applicability.
Even new rating is taken, then only it says very clearly new rating. There's a small amendment, so we skipped it.
Any agreement that is not in the normal course of business to be considered?
If there is a threshold impactful and is there impact on the management, imposing the liability, the restriction and creating the liability, yes. Those are the things which we have to see.
You can continue with the presentation.
Subparagraph C has been substituted, which now includes frauds or defaults by a listed entity, its promoter, director, KMP, senior management or subsidiary, or arrest of KMP, senior management, promoter or director of a listed entity, whether occurred within India or abroad. So now this disclosure has been made wider by including senior management or subsidiary. or senior management of the subsidiary also with this disclosure. Further, the fraud or default may have occurred in India or abroad. So even that needs to be disclosed by the listed entity. Definition of fraud and default has now been
But one second,
properly
Alifya.
mentioned.
Yeah, once you
Yes.
decide, once you discuss about the default by the director promoter, if it has an impact on the listed entity, then only it has to be disclosed, not their own disclosure. Suppose my MD has taken some loan and he has not repaid. That's not a default for the company. For the company, it will be disclosed only if there is an
Default
impact
in
on
his
the entity.
default in his personal capacity would not be required, but if it pertains to the listed entity, then definitely it needs to be disclosed.
No, if there is an impact on the listed entity
Yeah.
because of his default, then yes. In your analysis, you have just put on the last line, the personal defaults or individual that have no impact on the listed entity do not require to be disclosed. Yeah. Yeah, you have already mentioned. Yeah.
Somebody is asking what is the impact on the company example.
Suppose there could be example like definitely Varika, you can come up, and I believe that MD has defaulted something and it is fraud. You can define very clearly, but default which have the impact on the company would be very difficult example, but that those defaults are not required to be reported unless there is an impact. So in very few cases, there will be definitely some impact on the company. Otherwise, his CIBIL report may be because of his default. He will not go behind the bar. It will not be a criminal violation. The liability will arise. It's a civil liability. So I don't think the default made by the directors or MD in repaying his loan or anything will have a impact on the company. But it is
correct, Amita, because this is are there in the personal capacity if they are doing something.
no, the person has asked the question, can you share any example where the listed company will be, listed entity will have any impact? Per se, I don't see anything
Yeah.
impactful. But the fraud, definitely there will be huge impact, even if it is in overseas also. Even outside India, if he is arrested for a day, definitely there is a, due to fraud or anything, it will have an impact. And fraud will also go to the definition of the fraud. And the normal capacity fraud, which is defined under the Companies Act, also is a fraud. In addition, if there is a prohibition, I mean, as per the SEBI regulation on the prohibition of fraudulent and unfair trade practices, that kind of regulation relating to the security market regulation, that is also a fraud. For fraud, there will be definitely an impact, but for the default by the senior management or the directors or MD, I don't see any example where there will be impact. Unless there is a back-to-back something which there is a liability incurred on the company and can be impactful. He defaulted and company has given a guarantee. In that situation, definitely there will be an impact.
Correct. If the
on his
company
default.
If the company has given the guarantee for his default, then it will have an impact.
Then it will have impact. Otherwise, very few example I can think of. And the default also define the non-payment of the due becoming due and payable. When your liability is due and payable, you are not paying, that kind of a default also need to be paid, need to be intimated. Not only by the listed company, but by senior management and subsidiary. Those two are added. Earlier, it was only by the promoter directors and KMP. And the senior management definition has been widened by the core management or any functional head of the people. These are all under the senior management. So this definition is wider, and without considering your materiality policy, you have to disclose to the stock exchange.
The agreements entered during the financial year 22-23 only need to be disclosed in the AR 22-23 under Regulation 30A2. Please advise. We already discussed on this matter, because any agreement which is even subsisting today, that is what we said actually. What is the definition of the detail of the cyber security incidents or breaches as mentioned Regulation 27(2)(b)? Can you please explain this with some example?
We discussed last time.
This also we discussed elaborately.
But just for the benefit of the participants, Neha, the detail of cybersecurity incident, you have to just understand with your IT department also. Any kind of your breach of breach of your data, the leakage of data or information, those are all cybersecurity. You can find the definition also, and these are mentioned in detail in the discussion paper also.
Cybersecurity has to be read in connection with the IT rules because they are the Information Technology Act also and the rules therein. So that help needs to be taken up to supplement the cybersecurity because nothing is provided in the Companies Act or LODR regulations. So here the Information Technology Act and the rules would be helpful for understanding what is defined as cybersecurity incident breach.
Yeah, in fact, we discussed this also in the last webinar. So probably the recorded session would help us a more understanding of this. Family settlement agreement resulting in a minor change of the percentage of the holding of the significant beneficial owner in the ultimate holding company without any change in the control of the immediate holding company and the listed company needs to be disclosed as an agreement covered under 5A of the Schedule 3.
No, if there is no impact or there is no restriction or no creation of liability, you don't have to. But this will go definitely under SBO rules under the Companies Act, and you have to disclose to the ROC.
Yeah,
but
SBO
here,
rules you
the
have to
stock
disclose.
exchange, it's not
Yeah.
required if there is no impact.
Yeah. Because SBO rules you have to file the form. Is
And
there any? Yeah.
Yeah, sorry. Yeah, go ahead.
No. I said actually under the SBO
Correct.
rule you have to actually intimate to the ROC by filing the form, I said.
Yeah, true, sir.
If there is any specific format to be submitted with respect I think in this one.
With respect to the default of
default
loan.
of the loan or subsidy of the listed company.
No, there is no format, but format may come up.
Yeah.
As on date,
today
there is no format. It is just a disclosure. You have to disclose.
Yeah, it is a disclosure. Format is not there today. The stock exchange wants it, they may intimate the format. Definition of the fraud provided is inclusive.
Yes.
What can be considered other than the provided definition for fraud?
Yeah, it is inclusive. It is not a full definition. So the definition of fraud under the Companies Act or anything which is under the PFUTP regulation of SEBI, those are all the fraud. And in the normal circumstances, you may have to refer to the definition of the fraud under the Criminal Proceedings Act or CRPC. There you can see those are all because it's an inclusive definition. And here the fraud means where there is an impact on the company, definitely creating some kind of a liability, breach of something also can be a fraud. Fraud can be a very wider term. So it's unfortunate it is inclusive. So we have to work on it. What could be defined? And arrest also is included. Earlier it was not included. The arrest in India or overseas.
But in case of the criminal case, even if does not concern the company, whether it need to be intimated.
Yes. All kind of a fraud. Intimation is required.
Ease of allotment by the company are passed via circular resolution. Please, how does the company comply with the 30 minutes disclosure requirement in case of the circular resolution?
We discussed this, that practically.
Yes, the last time we discussed actually.
Yeah. If somebody has joined later, they may be missing out on something, but we discussed it.
Yeah. RS includes taking custody by the police based on some random FIR.
See, police doesn't take just on a random FIR. The arrest FIR is separate and the arrest will be through the...
Correct.
I think arrest doesn't happen just like that.
Yeah, arrest actually called for with a summon. Because
it will through the judiciary process. It's not the regulator.
That is right.
It's a judiciary procedure.
Default of a director in the payment of the credit card bills required disclosure.
Unless and until it is not impacting the company, you don't have to intimate. How does it impact the company?
Yeah, it will be his CIBIL rating would be.
His CIBIL rating will be there.
Yeah.
Go ahead with the flip.
I think we took up all the question answers, so you can go ahead, Alifya.
Subparagraph 7 has been changed to include senior management, any changes in the office of the senior management to be disclosed by the listed entity.
I think that's what it's relating to the disclosure now, but the 7 days time starts from what day? That's a question mark which we discuss. Now it is coming under regulation 30. It is linked to the main regulation. Yeah.
Further, subpara 7C has been inserted, which provides for resignation of KNB's senior management compliance officer or director has to be, along with the detailed reasons, has to be disclosed to the exchanges within 7 days from the date of such resignation. So earlier, the resignation of the auditor and independent director had to be, detailed reasons had to be mentioned therein. Now, even KMP's senior management or compliance officer or director resigning from their post needs detailed reasons for their resignation.
Now existing senior management need to be appointed in the general meeting. No, senior management is always appointed by the.
Yeah, it is always appointed by the internal policy.
Yeah, internal policy, not in the general meeting. Shareholders appoint only
NRC
the
and the
directors.
board.
Yeah.
NRC and the board takes the call.
Yeah. Whether the related party transaction with the SMP is also required to be disclosed.
Sorry?
Whether the related party transaction with the SMP is also required to be disclosed. I think senior management personally.
Senior management is also required to be disclosed. Of course, yes.
Yeah.
That is coming under the related party transaction disclosure, and the audit committee will decide and goes to the.
Go ahead with the plea.
Yeah. Subpara 7D has been inserted, which provides that in case the managing director or CEO of the company was indisposed or not available to fulfill his requirements of the role, then for more than 45 days in any rolling period of 90 days, then the same shall be disclosed to the stock exchanges along with the reasons of his unavailability. So here this important amendment has been made whereby an important role of an MD and CEO when he is not available over a period of 45 days, then the same needs to be disclosed.
I think there is a lot of discussion around this yesterday also in the another webinar. Whenever the person is not available, indisposed, whether he's handling his role from anywhere, that is not considered as an indisposed.
Yeah, I think people are confusing it with the out of station. The MD goes to US or somewhere. So that is not the scenario actually. People are mingling it with the travel plan.
Yeah, so even if I am traveling, but I am available to the team, I am available and disposing my duties, I am fulfilling all my duties, then it is not required to be intimated. But suppose your director is going through the major surgery or major and he is not available. He is in the hospital, he is not available to team, he is not available to give any kind of instructions or any kind of a decision. Then you can say that he is indisposed and he is not able to fulfill his. The main important is his unavailability to fulfill his duties and responsibility. And another question comes up that what is the meaning of rolling period? 45 days in a rolling period of 90 days. So if I'm available in 15 days, again 15 days, so should I intimate each time? So if the 45 days is crossed, then yes, we have to intimate immediately. Even in the second event also, in the rolling period of 90 days, first 45 days is not available. Again, in the next 45 days is not available, you have to intimate again, he is not available. Not available, it means not physically, but he is not able to fulfill his responsibility. I think some question has come on the same. What is the rolling period? So rolling period of 45 days is a continuous 90 days period. 45 days period is not available. Maybe first 10 days and again 15 days next, again after 50 days. So in an overall period of 90 days, 45 days is unavailable, then it has to be intimated.
Recently, while raising the fund, investor asked the CIBIL for all directors. So any default by the MD might impact the decision of infusion of the fund in the company. Can default of credit card bill which impact the CIBIL score mean impact on the company?
No, it can't be impact on the company directly. It could be indirectly, but here the word directly, indirectly was not mentioned. So if it is directly impacting on the company, it has to be intimated. These are all very hypothetical sometimes.
Yeah, that is
I
right.
don't think such situation arise, but I think even if the situation arises as a factual, I don't think it will be impact on the company. Varika, what is your view?
Yeah, correct. Some situations we just envisage, but we are not able to think of. So it's better to deal whenever they arise.
Somebody is asking what happens if the person goes on leave.
He can definitely take a leave 30 days.
Obviously, the company has a leave policy.
Yeah. As per leave policy, it is not. It says that he is indisposed. he's indisposed without taking leave, is not available for giving and fulfilling his duties, then only
Yeah,
this
if it is
provision will be triggered.
yeah, if it is a garden leave, if MD has been sent on a garden leave by the board in case of some non-governance issues, then obviously you need to intimate because there is a governance issue also and the garden leave where he would
Normally,
not be there.
Varika, you will be knowing it. Normally, what happens is whenever the senior management goes on leave, there is always an alternate arrangement has been actually made, distributing his functions in his absence or during his leave period, who will do what, etc. That arrangement is always done by the company.
Yeah, that is fine. But what I'm here saying, ki if there is a garden leave, if there is a governance issues and where on board after considering those issues, has sent the MD only to the garden leave, then this could be an indisposition of the MD, wherein he has been sent by the board. So this at that point of time would be required to be reported.
Yeah, that is right.
And Bala sir, even if 45 days or he is leave in a rolling period of 90 days, even if he has made the alternate arrangement, then
Yeah,
also the intimation will be made because he
intimation has to be
himself
made.
is not fulfilling his duty.
Yeah.
And so the intimation has to go.
Just one thing.
What the question is, director is advised for bed rest, but taking updates on regular basis, but not participating in day-to-day operations. Shall it qualify for reporting?
No, I think if he's not participating, but is he available for any decision?
Yeah,
Is he
decision.
able to fulfill the question is whether he is able to fulfill his duty on the bed also? Then yes, he is not required to intimate.
Yeah.
Yeah, panelist and Mr. Bala, we have to keep in mind that the watch. Many
Yeah,
slides.
you
How
are
many
talking about
slides
the
are
timing.
there?
I think there are now.
part 3 करना पड़ेगा.
No, we will finish today only. There is only 2 points are remaining.
I think only 2 or 3 slides would be
Dipti, there are only few points are remaining. We will be able to close.
I think 1 or 2 slides would be there.
And there are no more questions. All the questions have already been answered.
We will we'll take up the question last. Now let Alifya
I
complete
think
the
Amita
presentation.
take that way. Otherwise, it will
Yeah.
be
Alifya, complete your presentation.
Yeah.
Okay. Have the discussion, but no question answer now. In the last 5 minutes.
You can give your comments. Panelists can give your expert comment, but a question we will take it at the last.
Alifya, take to the next slide now.
Yeah. Thank you.
I think we discussed about the schedule. 2 days intimation.
Regarding this,
you can briefly update. Yeah,
you can move on.
So the disclosures pertaining to any analyst or institutional investors meet has to be made at least 2 working days in advance. This we have already discussed.
Yeah.
A new para has been inserted, sub-para 18, which provides that announcement or communication through social media intermediaries or mainstream media by directors, promoters, or KMPs or senior management of a listed entity, which is material and is not made available already by the public and listed entity in the public domain, needs to be disclosed. So this also we have already disclosed regarding discussion has been made regarding any news in the mainstream media.
Yeah.
I think here also you have to sensitize all your directors and KMPs and senior management that whatever the statement they are putting on the public domain on the social media, which is explained properly, social media shall have the meaning as defined under the IT Intermediary Guideline and Digital Media Ethics Codes Rules 2021. So in that media, whatever they disclose, it has to be informed to the company immediately, and company has to put it to the stock exchange. You cannot say that we are not aware. So sensitization of this kind of obligation on the promoter, directors, senior management is important by the secretarial auditor or by PCS. Yeah. Yeah, go ahead.
Yes. Another subpara 19 has been inserted, which provides that actions initiated or orders passed by any regulatory, statutory, enforcement authority or judicial body against the listed entity, its directors, KMP, senior management, promoter or subsidiary in respect of search or seizure, reopening of accounts under section 130 or investigation needs to be disclosed. Further, the points of disclosures have also been provided, which includes the name of the authorities, the details and nature of the action taken, receipt of the order or direction.
Alifya, it's okay. We don't have to give the detail. But I think basically we have to understand the questions are more around that what kind of an action whether the show cause notice coming is to be disclosed. No, here the 3 points are very clearly given. Either there's a search and seizure or the reopening of account or investigation as per the Companies Act, then only it has to be intimated. And what has to be intimated, that details, I think it's very much provided in the regulation. So we don't have to just go ahead the next also, another 20 number paragraph.
Yes. So further details have been provided, whereby action taken or orders passed in respect of the directors, KMPs, senior management of the following things: suspension, imposition of fine or penalty, settlement of proceedings, debarment, disqualification, closure of operations, sanctions, warning or caution, or any other similar action are also required to be disclosed. So this is in addition to the 3 items presented in the previous slide.
It's very clearly even imposition of a single 1 rupee fine or penalty or 1,000 rupees also you have to intimate. Even for the 1 day delay, if there's a penalty, you have to intimate. Those are the governance issues, and that's the reason the stock exchanges require that such kind of a disclosure to be given to understand what kind of governance issues can come up. If repeatedly company is delaying 1 day, 2 days, that means the governance are not fully, or the internal controls are not proper. And I think some question had come up before we discussed what is the regulatory, statutory, enforcement authority and judicial body. Why these are the only 4 bodies they have covered. But I think in these 4 bodies, the entire world will come, like your regulator, different regulator, maybe ROC, RD, SEBI, RBI, or your IRDA, or the RBI, wherever under which authority you are under control, that regulator is coming, enforcement authorities are also covered. Judicial body covers all your criminal and civil up to the Supreme Court also. And the 4th is a statutory body, maybe for the Provident Fund or other various state act, state compliances also we have to do. So those are all statutory bodies are also covered. So under this gamut of whatever actions to be taken are with all these 4 regulatory, I mean, the 4 authorities. Yeah, you can move on. You can skip this, I think. This is a voluntary.
Voluntary revision of financial statements. So that has to be disclosed. Schedule 3, Part B, subparagraph 2 has been substituted, which provides that any of the events pertaining to the listed entity for arrangements for strategic, technical, manufacturing or marketing tie-up, adoption of new line of business or closure of operation of any unit or division or subsidiary is required to be disclosed. So here the materiality provisions have to be taken into consideration.
No,
since it pertains to Part B.
This was already there. They have just put into ABC. They have just
aligned. They have specified.
They have just
they have
because
put
new
in
line of business. Yeah, it was already there.
Instead of comma, they put in the ABC.
They only put the
Go to the next, I think, the paragraph 5.
Rearrange the section. That's all. Nothing else.
Yes.
So your agreements earlier as a borrower. So now that word has been deleted. So here the listed entity can be a borrower or a lender, or any other agreement which are binding and not in the normal course of business, and revision or amendments or terminations thereof have to be disclosed. So this is an important amendment again.
Here under paragraph B, the disclosure will be only on your materiality. You have to consider your materiality. So somebody has put the question that whether the loan agreement with my subsidiary or banker, do I have to intimate? So if it is a normal course of business, you don't have to, and you have to check all your materiality policy also. Basis that you have to intimate. It's not under para A. It's in para B. Yeah.
Subparagraph 8 has been substituted, which provides that pendency of any litigation or dispute or the outcome thereof, which may have an impact on the listed entity, have to be disclosed.
In past, many companies were not giving any such kind, and they were intimating that it's under the sub judice and I can't disclose. So now SEBI has mandated to the stock exchange this regulation that you have to intimate about the outcome also and the pendency also.
Pending litigations.
Yes.
feels it is not, I'm not happy with this, because a litigation can go on for 4 years, 5 years. Okay. So once I'll intimate, it will be like people can take it, shareholder, investor community can take it in any other manner, whereas the company is contesting. So I'm not, this is a very not a advisable move by the SEBI, because until the matter is subjudized, nothing is going
No,
to.
the litigation and dispute with the regulatory action with impact was already there. Now we are giving outcome thereof.
No,
Pen-
they're saying pendency of any litigation. That's what
Yeah,
I'm saying.
Yeah, but earlier litigation and dispute regulatory actions were already there.
Yeah,
Now the
earlier,
pendency.
earlier what was happening, if I, the court has given some order, if some litigation was going on and the court has given an order against me, which is material, then I need to disclose. But here, when a matter is under subjudice, it is with the court, then no, what's the, I'm not
No, it is a
buying the.
dissemination of information equally to the public who have invested in the stock in the company's shares. So
Because
that's the
anyhow,
purpose. But you have to check your materiality policy also. No, such kind of litigation. You increase your. It is optional. You change your materiality policy, and if it is not as per your materiality policy, you can always keep. Your materiality threshold will touch, then definitely you have to give your litigation and the pendency at what stage. Somebody asked, what is the meaning of pendency of any litigation?
yeah.
The pendency of litigation, at what stage it is out, it's pending. That kind of a status you have to give. You have to give whether the already some stay has come, or it is under discussion, or it is a consent terms are going on. That's a status of pendency.
Cannot be
Because
because of the subsidiary company of the late filing of the particular form MCA. Does it require an intimation by a listed company? It seems overstretched.
Bala sir, don't take the question. We'll take the question now. I think the last two slides must be pending. No,
Okay.
Alifya?
Okay.
So let us complete
yes.
so that we are overshooting the time. So 5 minutes complete, Alifya.
Sure.
Yes, it will be over. So subparagraph 9 has been substituted. Any frauds or defaults by employees of the listed entity which has or may have an impact on the listed entity. So now this has been already mentioned. So even frauds or defaults by the employees have been included in the disclosure.
But if there is an impact on the listed entity, the impact will
Yes,
be
yes.
Yeah.
So again, the materiality provision will also be required to be looked at.
Next.
Part B, subpara 11 provides for giving of guarantees or indemnity or becoming a surety by whatever name called for any third part. So here again, proper this has been provided. Any agreement or whatever you may give a name while giving a guarantee or an indemnity. So that is required to be disclosed to the stock exchange.
only they
So
have
earlier,
added
ma'am,
by whatever name called.
any MOUs or
Yeah, that is what
that
we said
way
actually.
we had already discussed.
You may call it MOU, but it is still like a agreement. That's what we discussed earlier. Yeah.
A new subparagraph has been inserted which provides for delay or default in the payment of fines, penalties, dues to any regulatory, statutory enforcement or judicial authority. So any delay or default is required to be disclosed.
So here I have a question. They are saying delay or default. I am posing the question to the other panelists that let's say if there is a delay in the payment of the PF dues by 1 day, then I need to myself intimate to the stock exchanges that I have made a delay in the payment of the PF dues.
Again, paragraph B. So threshold limit, above your threshold limit, if there is a
Threshold
delay
limit.
in default, yeah, you have to.
Threshold limit will apply.
Yeah. There were, I mean, for just as a humor, I'm saying various regulatory authorities were not keeping a track whether we are paying or not. And now it has come on your own to disclose whether I have penalized you. Have you paid or not? I'm not going to check. You check and you intimate me. It's kind of a situation there. But I think many a time, many regulator forgets and it's not been tracked whether the company has paid or not. People just don't pay and Nobody is reporting also. It's not on the similar auditor also to report. Penalty we have to, but whether the penalty has been paid or not, we don't report.
I think now secretarial auditor should do a quarterly secretarial audit, not a.
I think always it's been quarterly for I mean, for a large corporate, you can't wait till the end of the 6 months also. Half yearly also difficult. Every quarterly. Yeah,
in fact,
Yeah, because now this much coming into play, so you have to check whether there was a fine, so whether you have paid it or not.
Yeah. Alifya, go ahead quickly now. We are overshooting by 5 more minutes, so please go ahead.
This is the last slide. This is the last slide regarding the disclosure. Regarding the disclosures to be made in the corporate governance report. So now the particulars of the senior management, including any changes therein since the close of the previous financial year, needs to be disclosed in the CG report. Further disclosure of certain type of agreements binding on the listed entities. So as we have already discussed, any agreements entered by the shareholders, promoters, which are binding or having an impact on the listed entity, they are also required to be disclosed in the corporate governance report of the listed entity.
Schedule 5 is just an extension of the regulation 30. So whatever we discuss under regulation 30, we are talking about in schedule 3. Now you can take up the question answer. I think, thank you, Alifya, beautifully presented. Very difficult job in a short time, and you have highlighted everything properly. Bala sir, you can take up some questions.
What if negative net worth, even AOC 4 delay for 1 day, 100 rupees need to be informed to SC. As we discussed, any penalty which is to be informed. Normally, we make the provision for the pending litigation in financial. Like, normally, you make a litigation issue is a different thing because that is, you are talking about the depending upon contingency, non-contingency, etc. You make that is the thing. But here it is the question of the disclosure which comes into place. Do all the pending litigation or on the date of the notification are enforced, or these regulations have to be disclosed?
All the pending litigation as on the date of 13 July.
Yeah.
You have to intimate.
Penalty imposed on the subsidiary company, late filing of the particular from MCA is required intimation. That we discuss actually. Yeah, that's all I think so. Nothing else is there.
So no question. I think already you attended. Good.
Yeah.
We thought that there will be a thing. So
No, nothing. Because we have been ongoingly addressing.
Yeah.
Alifya, accept my heartfelt congratulations to the excellent presentation covering all the points and also putting it in a highlighted red letters for the attention of the people. You have done a very, very wonderful job. Hats up to you. Panelists,
thank you.
My special thanks to you, adding your practical knowledge and giving the various clarifications, etc. and other thing and all. Many thanks to you. All the participants, definitely they are actually raising the various questions. They kept the session very interactive.
Very interactive.
That is the thing. Last session also
and
went
keep
on
us on
very
our toes, and the panelists also on the toes.
Yeah, that is there.
It's a learning for everyone. So I think
the discussion about the panelists was very important, and it cleared many doubts, I think, for everyone, including me.
I think the SEBI will come up, or we can put up about the resignation date. What will be the effective date? When to intimate? That question, I think, still debatable. Not very clear. We have to just deep dive further into the regulation wording and understand for the what is the date effective.
Yeah, I think SEBI will come out with some kind of
I am also expecting that only.
Yeah, because even they would be
critical. Varika, one more critical thing which as a corporate secretary you have to people have to do is a definition of the mainstream media and the cyber security. All those are definitely sensitizing the entire organization, including your extended branch anywhere in the world. You have to intimate that if you are getting any kind of a show cause or penalties or anything, you have to come up to the company and the secretarial or legal department. Those are, I think, the major work in the next 15 days or next 3 weeks.
One thing is there because the governance.
It's a very busy period already for the corporate CS because AGMs are lying and Q1 board meetings are there. So it's like a very tough time.
That is there. And another thing is the regulator wants to increase the governance and the disclosure more and more. there are a lot of things which need to be done from the employee company secretary, and as well equally it is the professional also. One more thing is that all the professionals can actually give a presentation to their clients on this, what is need to be done. That will be a wonderful idea to educate the people so that we do the right thing. Yes, over to Dipti.
Yeah, thanks, Varika. Thanks, Ms. Amita. And thanks for your time, contribution, wonderful discussion. Very grateful for your thoughts, answering all the questions and debates. Really enjoyed. Thanks. Thanks for your time.